Hello, my fellow wealth hackers. This is Rowan Cito bringing you the Truth About Real Estate Investing show. For anyone new to this show, I consider a wealth hacker one who invests in real estate, stock options, private equities, and maybe a bit of infinite banking. Uh, this plus a business that produces income. These are the assets of the rich. If you don't believe me, simply Google Tiger 21. Again, that's Tiger 21. It's a membership group, a network of individuals with 10 million or more of investable assets, and have a look at their member surveys as to their asset mix. In my experience, learning from the rich is a great way to become one of them. If you're on my email list, I've included a link in the show notes to a CNBC article. Uh, yeah, and then for I'll just spoiler alert: the top three weightings in order are real estate, public equities, so that's stocks and stock options. Hence, we stock hack here, and private equities. Personally, I'm way more real estate heavy, but otherwise I'm in line because I'm mostly heavily in real estate. Next would be my stock hacking, and then after that would be my private equities that I invest in, which are real estate developments. My private equity investments are in real estate developments and apartment buildings. For more diversification within real estate, all within Ontario. I laugh because I know that sounds kind of funny that I say I'm diversifying in real estate in other parts of Ontario. Anyways, I'm pretty sure any financial planner out there would not call this diversification. I'm not a financial planner, so don't take my advice on this. However, in my experience, these returns are tough to beat, and I would love to speak to any financial planner that can beat the returns that I'm getting. If you want to email me for a referral onto where I personally invest for real estate developments and apartment buildings, please feel free to do so. More than happy to help. For those who are looking for something to read, the holidays are approaching. Reading's always a good thing. It's one, I teach my kids never use the word never, but I say it all the time. Never stop learning. That's the only if my kids ever say never and they say it like that, I'm fine with that. One of my mentors recommended that I read the book Who Not How by Dan Sullivan. Dan Sullivan's the famous coach. He's the owner of Strategic Coach, which is meant for entrepreneurs. Even though you're a real estate investor, you are still an entrepreneur. It just happens to be you're owning a business that's in the real estate industry. Anyways, I listen to the audiobook I listen to these audiobooks usually at least 1.5 times on my commute to work. It's not even that long a commute, but it's not a heavy technical read either. It's not that long a book either. So I found it pretty easy to consume. I actually find myself saying who not how a couple times every day to team members, to my kids, to Cherry. The book is about how we as investorpreneurs, we often focus too much on trying to learn how to do something versus who already has those skills, the experience and know-how, and finding them to get them to help us. Either hire them to do it or hire them to teach us. I mean, that's how we built my main business, which is Island Real Estate. Which is where my team members are. Most of my team members are licensed realtors, and the service we provide is we help people buy investment property. And these people tend to be from the GTA. They're regular Canadians with busy careers and kids and family. They don't have 10,000 hours to master real estate investing and build a team like we have. Hence, we are their who. They leverage us to be their who to help them hack their wealth versus there's other people out there, they choose to work on the how. So they'll go read 50 books or watch or listen to thousands of hours of YouTube and podcasts. So that's their focus. Versus in my experience, I've had a lot of success in hiring experts. I've shared before in this podcast, I've had a realtor coach since 2011. I have a real estate investing coach. I have 2 stock option coaches. I have a golf coach now. I've been working with a golf coach for the last 2 months at least, maybe a bit long. No, since the summer. And my golf coach is very good at golf. He shot a +1 when we played 9 holes together on the weekend. And I've locked him up for another 2 months of coaching. And for some, that's a significant amount of money. The cool part is that less than 1 day of my stock hacking returns paid for it. Um, he's a young guy, so for him, he's not a salesperson. So for him to ask for money, and he doesn't realize it's not that a significant amount to me. So it's nice, just yeah. Um, and also stock hacking return wise, my last week returns will actually pay for my next year's golf membership. It's been going that well. That's also another tip I've learned from the rich. The ideal is always, when your cash flow from your investments, pay for your expenses, especially the frivolous ones. So whatever part of wealth hacking you're interested in, real estate, infinite banking, stock hacking, private equities, which include like real estate development, apartment building investing, feel free to sign up for my newsletter and you can see what we have going on. For example, January 23rd is our next IWIN meeting. It's open to the public. The cost is $20 and it all goes to charity. Clients attend for free. Cherry and our insurance guy will be presenting on the subject of infinite banking, a common practice used by my rich friends. In a nutshell, it involves whole life insurance and then borrowing against it, or you can just use it as collateral to be able to obtain additional mortgages. My lawyer Hussein will also be in attendance to give any legal perspectives, and I've sent him a bunch of screen captures I've taken from social media from people trying to raise capital. I've asked Hussein to comment from a securities law perspective so we can learn how to raise capital safely without massive investigations and fines from the Securities Commission. So if you're interested in getting more information on these things, go to www.truthaboutrealestateinvesting.ca. Again, that's www.truthaboutrealestateinvesting.ca. Enter your name and email to subscribe, and you'll be informed about all of our upcoming events and how to get in touch with my team. That's taken me well over 10,000 hours to assemble. It is our goal to be the who for generations of future wealth hackers, owners of multiple six-figure side hustles. Speaking of side hustles, our guest this week is David's son. You may not know who he is. That's totally cool. He's a Princeton graduate. Yes, he's American. He's an engineer who does engineering stuffs for his day job, but that's not what he's here to talk about. He has 3 serious side hustles. He's obviously a bright guy. You could actually argue it's 4 side hustles because he does own a single rental property. So I guess that counts. So he actually has 4 side hustles. David is a general partner in an investment real estate syndicate, which is a structure required for multiple investors on large projects, such as a student rental residence with hundreds of bedrooms. David is a part-time realtor. He also has his own hedge fund, where he is the only general partner on it. And a hedge fund is an alternative investment of pooled funds where he employs stock option strategies to actively increase returns for his investors. David's also a husband and a dad to his 2 young kids. I suddenly feel lazy. I bet David can bench 250 pounds and has abs of steel too. Anyways, I present to you David's son. Hey David, how you doing today?
Hey, Erwin. Good, man.
What's keeping you busy?
Not much. My day job, my real estate that I do, and the hedge fund that I manage. Trading. So a lot of different things I'm involved in these days.
So for the listeners' benefit, I already warned Dave that he's going to have to come back. Is it David or Dave?
David.
David.
Yeah.
I've already warned David. I'm likely going to need him come back because he just does so much, and I really like to dig into it. So you've already said a mouthful there. There's
Sure.
much to unpack. What did you do first then? So hang on. So my listeners, only a small percentage of them will know who you are. I've already actually warned some of them that you're coming on. So a lot of people are excited. They've already sent some questions in.
Okay.
So again, most of my audience is Canadian. This is a Canadian podcast.
Right.
But I reached out to you because you've been so kind on social media about the amount that you share.
Sure. Yeah.
You've written documentation around how to invest and start a hedge fund, and you're so patient in answering people's questions. I thought this guy would be great to have on the podcast.
Yeah.
He might entertain me.
It's just my way to give back because I got a lot out of those when I was beginning, and I've connected with people on those forums, just like you connected with me, and just kind of absorb knowledge. And I'm at the point where like I said, just kind of giving back and just stuff, some of my content, my papers I wrote, my
Hmm.
strategies, trade logs, certain things that I'm willing to share. I mean, I'm not sharing everything, but there is a lot of, I think, knowledge that generally I feel like people can benefit from.
Hmm. I know it's actually funny because we're all in the middle of the pandemic, but at the same time, like there's no better time to be learning. The
Yeah, that's
resources
true.
are more available than ever
Yeah, yeah.
to learn ways of making money.
Funny you say that. I'm actually trying to learn programming now, so I can get into automating some of my trading. Yeah.
Awesome, awesome. Okay, um, so for the listeners, I need them to understand why you're an expert. I know some
Am
things. For example,
I? Sure.
I don't know many people with their own personal hedge fund, um, and then also and I mentioned to you before we started recording, we're going to talk about general partnerships in real estate
Sure. Okay.
syndications, and I think that's only maybe the third time we've mentioned that term, even on this podcast of over 150 episodes.
Cool.
So
Cool.
this is a real estate podcast. Could you explain a real estate syndication, and
Yeah.
also
Yeah.
let people know where you are, where you live, because
Yeah. I'm in Northern Virginia, so I'm about an hour away from the capital, from DC.
Mhm.
So that's where I am, and a syndication is essentially just a limited partnership. Because people who want to get into real estate, you start out doing the single family, fix and flip or buy and hold, but it's capital intensive, right? There's barriers to entry of getting involved in real estate. There's economies of scale, and syndication is a way for a group of investors to tackle a much larger project. You talk about like an entire apartment complex or student housing, and the general partner, they're the ones who find the deal, acquire, put everything together, run the show, get the property management, and the limited partners basically put up the capital. Because for these large properties, you might need to raise, 25% of the down payment, and then closing costs, capital expenditure, and then you can get a commercial loan for the rest. But essentially, you're almost kind of crowdfunding the real estate, right? And so the limited partners put up the capital, and the profits, all of the NOI is split between the general partners and the limited partners. Maybe like a 30-70 split, something like that. 30 to the general partners. But the general partners are basically the sweat equity. They're the ones with the connections, the know-how, and limited partners just want to put up money, get that mailbox money as a return. So from a high level, that's it from a high level. If
Mhm.
you have, I don't know if you have specific questions that come to mind. I'm sure you do,
Mhm.
but like I said, that's it in a nutshell.
Right. On this show, we've talked about student rentals, like buying a house and renting it out to like 4 or 5 students. That's not what
Sure.
you're talking about.
I mean that, but bigger. Like there's a project I'm involved in. It's in North Carolina. Well, maybe you don't know, Wake Forest University. So we got a student housing complex, across the street, and that's one of the projects. Where I forget how many units it was, but yeah, it's a big project. It was like, $20 million, something like that. So you can imagine, no single person or even small group of people are going to tackle something that big. This is going
Right.
to be dozens of investors, you know, and if not hundreds, and it just depending on how much each people put up as an investment amount.
Right. So it's probably a couple hundred bedrooms.
Yeah. I think this one had even some cottage style ones. So there were some buildings with like 4 beds each. So it was a mix, but yeah, like you said, a couple hundred beds. That sounds about right, and there can be even bigger. You can get 300 unit apartment complexes.
Mhm.
So there's no, but generally with these things, bigger is better for the most part. Again, because you get that economies of scale. That's what you want, and that's why you kind of go into the multifamily is essentially what
Mhm.
we're going after.
I've seen some presentations around student rentals in the U.S. and I've seen some like resort style stuff, like like Cancun resort style.
Oh,
That's
okay.
not what we're talking about, is it? You have like a pool and stuff, and
It's funny you mention that. It can be because there was one we were looking at, which was for Texas A&M University, but it was like a little bit further away from the university itself. But we were like advertising that there was a shuttle service to the university. But then because it was not like your traditional student housing. There was like amenities, and it was like, yeah, it looked like vacation homes, you know.
Yeah, yeah,
But yeah, I think that's probably the kind of thing that you've seen. Um,
yeah. But I haven't seen that here in Canada, but we don't have the weather for that.
sure.
The only time there's weather for that is the summer, and students aren't in school in the summer. It's just because you mentioned cottages that made me think about vacation
Yeah,
property.
sure.
Are you is it literally there's detached properties on as part of this project as well that are like 4 bedrooms?
Yeah, yeah, that's what it was, right. So it wasn't
Okay.
just one big building. Yeah, I mean, student housing, I mean, it could be, I mean, that's just a term that's used for students, but it's not, there's not a specific property type necessarily. It's not always like a big apartment complex.
Right, right. And then can you talk to your role? Because I remember, I think on another podcast I listened to, you were in the, it sounded like you were like in the, partly the acquisition team in terms of at least of analyzing the deal.
Yeah, so the general partnership, there's a lot that they do from, like I said, finding deals, negotiating deals, acquiring the deal, closing, due diligence, and then after closing, the management, the investor relationships. So there's a lot of parties that are involved in the general partnership, and you can be involved in a bunch of them or just some segment of the roles.
Hmm.
And so, me and my partners, we had formed a smaller syndication group that actually co-sponsored. So basically, usually there's a main group. That the primary sponsor is the one that probably has the most experience, the longest track record. They're the connections that can kind of source the deals. But sometimes they might need a little extra help in terms of raising the capital. So
Hmm.
you may have multiple co-sponsors that they're in the same business, but maybe they're smaller or less experienced, but they maybe have connections to raise capital. So
Hmm.
they're all under that general partnership umbrella. But then, so our group as a co-sponsor, we do help with the due diligence. Some of us, like one of our team, went with the main sponsor group to do the on-site visit during the due diligence phase, or we'll look at underwriting and looking at the deal and seeing if everything checks out. Because us as co-sponsors, if we want to bring in our investors, we have to believe in the deal as well. And
Hmm.
sometimes we even put up our own capital.
Hmm.
Basically, you can invest yourself, your personal money as a limited partner and be on the general partnership side. And usually that's good because it means you have a vested interest, right? Investors like to see that the general partner put up their own capital because otherwise the general partnership role strictly doesn't put up capital. I mean, they can, but they put up much less. But obviously that looks, it's a, uh,
Having
more
skin in the game.
alignment of interest, right, right.
Yeah.
So now, so we did that, that prior to closing on a deal, but after closing on a deal, we want to keep our investors abreast of what's going on, the operations, how things are going. So we kind of flip over to sort of like an investor relationship type of role.
Hmm.
So that's something that's still ongoing that I'm part of.
And you plan to be part of that in that world for a while?
I think as we were talked about kind of off air earlier, I'm personally in our group haven't been actively sourcing deals or trying to get in sponsorship with other new deals, and part of that was just because of COVID and everything. Like the market kind of got messed up, and multifamily to some extent was getting a little bit saturated. Just the whole real estate market in general. But as far as the deals that we're involved in, maybe three of them right now, at least until those deals go full circle, meaning we actually sell them at some point and everyone
Hmm.
exits, then yes,
Hmm.
we have an obligation to sort of manage the relationship with the investors and kind of keep them up to date.
Hmm.
So that's just by design. I'll be involved at least in that capacity until the deals that we have or are part of right now kind of go full circle.
Right, right. Is part of the decision possibly just to how you want to focus your time? Because
Yes,
like, it's
yeah,
like like multifamily is, it's the valuations are nuts.
right,
Like real
right,
estate's like for my real estate doesn't take that much involvement to be holding my real estate
right.
versus I see all this opportunity in the market in the in the financial markets.
Yeah, yeah. No, definitely because time is limited, right? And I just have to figure out personally where my interests kind of gravitate towards,
Uh-huh.
where my skills develop, and what is the best utilization of my time as far as that return on return on time. So yeah, that's true what you said.
Uh, so you have kids
Yeah, I have two
You
kids.
have a full-time job that's unrelated to anything we've
Yeah,
talked about.
yeah. But I mean, I as much as I'll say it's an engineering job. I work with like semiconductors and microelectronics, but it's a flexible job. I mean, even before COVID, it was full telework, so it's flexible schedule.
Uh-huh.
But yeah, I mean, otherwise, honestly, like yeah, regular jobs as far as scheduling, it's gonna make it impossible to
Right.
do much of anything else unless you're just gonna like do stuff on your own in like the evenings or something.
It's still a 40-hour commitment, roughly, right?
Yes, yes, but I
Even though
can.
the hours are flexible, but
The
still
hours are flexible.
40 hours is 40 hours.
Yeah, 40 hours, 40 hours, but I can fit it in. I just got to get in the time, right?
Right.
So, yeah.
Right. So you have several side hustles. You
Yeah, you
may
could
own the
say.
record for this show for number of side hustles.
Sure,
At
sure.
least the ones I know about. So you're a general partner in a real estate syndication. You have your stock options. You're a realtor as well. Is
Yes,
that
that's correct.
correct?
Yeah,
When did you become a realtor?
about 4.5 years ago.
How do you? What was the reasoning for that?
It's funny. We were about to have our first kid, and my wife was thinking about getting licensed. So we're both licensed,
Oh,
but
okay,
she
okay.
thought it was a way to have some kind of an income. She was going to quit her day job, and she wanted something that could quote unquote make money without that full time commitment, which to an extent is true. But honestly, like real estate is it's not as easy as some people might make it out to be. It's not just open some doors, show some houses, make some money. It
Mhm,
can be, but if you want to be successful and have that grow long term, you have to put in the effort and provide that level of service. Otherwise, you're not going to get any business.
mhm,
Um, so and so it was a little naive why we got into it. And the other reason was like, and then I was actually licensed before that as well, but we got it mainly to like save the commission when we sold our house or when we
mhm,
bought a house, right? Because
mhm,
you can earn a commission for yourself. So I wasn't really doing any business, but when she got licensed, and we got a little bit more business just from some friends that we knew, and our brokerage that we joined, they were like giving some leads out to the newer agents. You have to split the commission with them, but as some of that started picking a bit, and I just have a natural tendency to go all in on certain things, at
mhm,
least in the beginning,
mhm,
and the business just kind of grew on its own. And I'm not, we're not as hot and heavy as far as marketing and trying to grow that. That's kind of just in steady state now. But that's just how that started. It just you work at it. Anything you do, if you work at it, it's just you're gonna get returns and it's gonna pay dividends. But that's just how that started.
And do you do much? So you're saying it's in like a holding pattern. It's not a big part of your income because
Um,
I imagine these other things make you a lot of money.
it's 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 pretty holding pattern, meaning we aren't we used to like buy online leads and actively try to grow the business and do marketing.
Uh-huh.
So we don't anymore. And so
Mhm,
all of the business now is just residual and just basically nurturing your existing sphere of influence and
mhm,
your book of business.
mhm,
So I mean, it's been pretty good, considering that it is not a primary or source of income that we
mhm,
have to have.
mhm.
So definitely have been fortunate to just have that, you know, for side income, it's not bad, you know. Yeah.
Do you have any side income via buying and holding real estate or renting it out or flipping or anything like that?
Yeah. I have one personal investment property, and this one was just the usual trajectory that most people maybe start with, which is you kept your first house and you didn't sell it when you moved out. That's it. That was my first house. When we moved out and bought our next one, we were able to hold on to that and just rent it out, and that's been 10 years almost. So,
Mhm,
and
mhm,
and that's the extent we've looked into more and picking up, but the prices are pretty high here, and the numbers just didn't really make sense. We came close once, but just never end up pulling the trigger.
mhm,
But I'm glad I have it. I have that sort of piece of my portfolio overall.
mhm.
My financial picture, big picture that I have.
Cool. Okay, so I'm a real estate geek, so I have to ask. So what would a starter home cost, and then what can you rent it for? A starter home, like say like a bungalow, 3 bedroom bungalow, 1 2 bathroom.
What's a bungalow? That
It's
term
a
I'm
one
not from.
story house.
Okay.
I don't know if you guys have that in your where you guys live.
No, we don't really have that here. So you're a starter home may be
Starter home with
like,
3 bedrooms.
okay,
What does it
that's
look
kind of
like?
starter home was usually have two. You're talking about like a two-bedroom condo maybe, or it,
Oh, you like
you
that
know,
already, eh?
maybe like a two-bedroom condo in like the 300,000 range, or if
Okay.
you're a little bit more, higher earning as far as, or if you saved up more, I mean, you could get like a four or $500,000 townhome that's three plus bedroom, 3 level, and that's usually maybe like a young married couple that has pretty high income. Otherwise, the down payment and the payment on that maybe for a single person that might be a little out of reach. But rentals on those kind of things on the condo, it could be like 1,500 to 1,800, and on a townhome could be like 2,000, 2,400, which is pretty high. Rent's expensive over here.
Hmm. That's interesting. That's not that dissimilar from where we are. And yeah, which is the problem for many investors is it's kind of hard to cash flow that.
Yes, yeah. There's a podcast over here called Bigger Pockets. I don't know if people in
I've never heard
Canada
of them.
listen to. Oh, okay, yeah. So
I'm kidding. I'm
yeah,
kidding.
okay. Oh, okay.
I
I
share the
couldn't.
same producer as them.
Okay, okay. Yeah, and I don't listen to them a lot, but like one thing I remember, and I don't know if this is still sort of the golden rule, but like that kind of 1% cash flow rule, whatever it is. It's like
Yeah,
you're not gonna get that here. Um, you
yeah,
know, maybe 0.5% or something
yeah. Maybe your
around there.
student rental building, but not
Yeah,
a
yeah, yeah.
single family home.
When you have, you know, um, even like a duplex or triplex or anything that's like more than single family, you're gonna start being able to do that. Or if you house hack, or if you do Airbnb or something. But otherwise, single family is tough. What the
Hmm.
price is here to get
Hmm.
that kind of cash flow that like people usually suggest, when you're analyzing those deals.
Yeah, with COVID, a lot of my Airbnb friends were pretty unhappy with how that went. I think they all decided to go long, mid, and long term after that. It's tough.
Yeah, yeah, it is.
It's actually funny because the pandemic has been awful. It's been so horrible for so many people, but for a stock option seller, it's been a pretty good year.
If you did it correctly. Obviously, like the moment of crisis in February, March,
Uh-huh.
if you're on the wrong side of the market,
Hmm.
you know, you lost your account in that one week. So it depends on what you're doing exactly
Hmm.
with the
Hmm.
options. But
Okay.
uh, in terms of the fact that volatility has gone up and options premium has gone up, and people who the trade like I do, we're generally sellers of premium. So
Uh-huh.
you basically there's richer options, and so in that context, yes, because people, especially after year like 2019 and 2017, where the volatility was just going down and down and down, and people are complaining this, lack of opportunity or not much you can make. And but yeah, from that perspective, yes, I guess it's a good thing.
So you've had this skill for quite some time. I remember reading or listening about how you started learning this in college
Yeah, it was in grad school actually. I was doing my master's.
at Princeton. Am
Princeton,
I
yeah,
correct? Yeah.
in New Jersey, and yeah, I just
I,
had
I
a
used to watch the
buddy.
Cosby Show. That's the only reason why I know where
Oh,
Princeton is. I've heard of Princeton.
okay. Um, yeah, one of my buddies there, he just I was like getting into stock trading,
Uh-huh.
getting into literally like I started watching like CNBC and like try to just pick random things, and but he was like, think about options, and he explained to me some of the basics. I mean, like really basic stuff, and I was kind of lucky, or maybe you can say unlucky, that I started actually trading right after the financial crisis with the housing crash.
Hmm.
Um, so on that point, everything was, we had this 10-year bull market that started. So the kind of strategies that we're doing were naturally just better suited towards that kind of bull market. And so
Hmm.
everything kind of just worked.
Hmm.
So I made money, but, you know, looking back, I wasn't really understanding why things were just
Mm.
working. So, and I always say for one of the worst things for people starting out is they succeed too fast or they make too much money, because you
Mm-hmm.
don't learn when you're making money.
Mm-hmm.
You learn when you're losing money, and hopefully the lessons are cheap. That's the best trajectory. You learn lessons along the way, but not lessons that bankrupt you. um,
Mm-hmm. Mm-hmm.
but yeah, that was when I kind of got started. It was back in right around end of 2008, early 2009.
Great time to learn.
Yeah.
Yo, bro, I started learning last fall.
last
And
last fall. Okay, so like
yeah,
last September, October, like
yeah,
before. Okay, okay.
yeah. And it was like, oh, it's all sunshine and roses.
Oh
The
yes, you're right.
volatility was just collapsing.
Q4 of 2019 was great, because if you start in the summer, there were some volatility spikes with the trade war and stuff, and then we
Yeah,
had the
yeah,
big sell off, and then September, October, November, December, it was like it was a miracle. Yeah, it was great. Yeah.
yeah. I thought I was the king. and then the pandemic taught me something.
Yeah, right.
uh, I only used a small bankroll at the time because I was still learning, and also my wife just was trying to control me very
Yeah,
smartly. She's an accountant; she's right behind me. I lost like $45,000 in March and February, which was a large part of
it's
my
tough.
account at the
That's
time. Yeah,
tough.
yeah.
Yeah.
Um, what so like you said, so the show is called Truth About Real Estate Investing. So we share about losses on this show. Uh, so what are the lessons um, to because that's usually people's first objection. I'm sure you've tried to convince friends and family to do stock option selling as well, right? I'm just guessing.
Um.
But I see that you try to give back so much, uh, but
Yeah. It's
people
it's
always say people have no idea. They're usually the first thing is they can say is like, actually, literally, someone said this to me on Facebook. Like, you can lose everything.
well, yeah. I mean, that's true with anything, right? But it's like particularly true with options, especially if you buy options,
Mhm.
because when you buy stock, like when you buy real estate, right, you have some asset that's just there, right? So unless the house explodes or that company goes bankrupt, presumably, even if you don't make money, you're gonna lose it all. But when you buy options, because they decay, right? There's an expiration. If the market doesn't move the way you need it to, you will lose everything. And
Mhm.
you know exactly when that time is. So
Mhm.
if you don't get the trade right or the direction right at this date, your investment will go to zero, you know.
Mhm.
So
Mhm.
um but you were saying like lessons, or for people starting out, again, it's because number one is, especially if you make money in the beginning, like try not to let it go to your head. Like you have to get educated, you have to have a reasonable expectation, and focus more on the learning in the beginning, not necessarily making the money. Because with anything like real estate investing or whatever endeavor, if you're actually trying to do it long term, like there's time to make money, right? You're not in it to gamble or to hit a home run or to try and get rich quick. I mean, maybe you are, but like I said, that's just gambling. If you want to gamble, gamble. But if you want to be serious about it, then you have to put in the time. And it's great to make money early, um, as long as you temper that with the expectation, um, because one of the sort of common uh, biases or people have is like they assume they're responsible for something that went well, even if it wasn't really them, it was just luck. And in the beginning, it can be very hard to parse that out. What was it that was a result of what you did and just getting lucky?
That's a difficult thing because people always say to me, "Oh, anyone can make money in this market." I'm like, how much money have you made in this market? Like nothing, because they're not in the market. And
Right,
I say
right.
the same thing about real estate, right? Like for where we live, immigration is just out of control. It's crazy. Uh, so it's a friend of mine said real estate is like an open book test, right? Just the test to see who's actually reading it,
Mhm,
right?
mhm.
Because you follow the market and you're much smarter the guy than I am. So you understand a bit about economics. You understand how interest rates have been coming down and they're going to stay low for a while.
Sure.
We have massive immigration where we live.
Okay.
Our federal government announced somewhere around 400 to 500,000 new immigrants will be coming over the next 3 years.
Okay.
That could be potential a couple customers for my rental business and for in case people want to buy some real estate. That's a lot of people,
Yeah, that makes
right?
sense. Right.
Right. So it makes a lot of sense in that way. So then, I don't consider myself any genius. I'm just trying to get in the way of all this, put my assets in the way of it. No different than what we call stock hacking, which is largely stock option selling. I do buy some long calls. I bought a long call on Zoom today. Not
Right.
advice, anyone. Anyone who's listening, this is not advice. I'm not a professional. Anyone who mistakes me for a professional, you gotta be joking. uh, but again, to me, I'm just being strategic. I don't think I'm actually that smart. Uh, but I am always concerned for when things fall apart, like they did
Right.
back in February and March.
Right.
Are there some lessons that you can share that will that minimizes your risks and minimizes your losses in those black swan events?
And you're talking about in the context of options, right? I just want to make
Options,
sure.
sure. Like
Oh,
real
okay. Yeah.
estate, like take like let's talk about real estate again, for example. For you
Okay.
talked about student rental. You know, in my experience, man, this everyone wants to go to school.
Right. Right.
Like even I know what Wake Forest is,
Right.
right? So I imagine lots of people who know who Wake Forest is,
Sure.
right? In
Right.
terms
Right.
of in terms of that they'll always attract students,
Hmm.
right? And if anything, they're probably growing,
That's
right?
yeah. I would imagine so. Correct.
I'd
Yeah.
imagine so. I'd imagine that most people from outside of the U.S. who have plans to be educated in the U.S.
Hmm.
Uh, well, it's actually again open book test real estate. The top three places for immigration, or for the top three places to go to university for people, let's say in like China, for example, the top three places to go for education would be Australia, U.S., and Canada.
Right. Right.
Right?
Hmm.
That's where they want to go. So that's where the demand is. So just
Right.
get in the way of it. So
Right.
even with the pandemic, I think it looks like we're gonna have a vaccine not
Hopefully.
too
Yeah.
hopefully
Yeah.
not too distant future. But the people are gonna want to go back to school again. They're gonna want to live near campus. They want to have the campus experience,
Right.
right? So you'll
Right.
probably forever have a customer flow for your student rental at Wake Forest.
Yeah. Yeah. And I think the a worst case is if there's some kind of uh situation with COVID where they're shutting down on campus stuff and move to. But even if they move to all kind of you know, distance learning, hopefully there's still people who stay on ground or something because
Hmm.
they might go back at some point or they just
Hmm.
already signed a lease or they want to live over there instead of going back home. But we're that's an ongoing thing and we just try to kind of monitor the situation. But you were mentioning about kind of managing tail risk, right? So
Hmm.
just to sort of parallel between the real estate and the options, with real estate is basically, if you own this building, you have insurance or something, some kind of hazard insurance, because that's sort of
Hmm.
your left tail, your tail risk event, or the property burns down or something. With not just options trading, but just investing in general, like you can use options as sort of a insurance, to protect your so I mean you can buy that. This is just one way to do it, but you can buy options that basically they gain value if there's a crash. And in fact,
Hmm.
I had, kind of these hedge positions in the COVID situation, back in February, March, that
Hmm.
I carried these and they were able to offset some of the losses that I had. And that's one way to manage tail risk. I mean, there's a cost to it. And a lot of people maybe forgo trying to set up these kind of positions because of the cost. But at the end of the day, it's like, you know, you buy home insurance, you don't really think twice about that. You buy car insurance, you buy health insurance,
Hmm.
and these are just things that are just part of risk mitigation, right? You wouldn't go without these things, and you don't really think
Hmm.
about the fact that hey, this is a if you talk about your return on your investment, these things are what we call a drag, right? You're just losing, right? You're just paying, and it's not that you don't want your fire insurance to pay off.
Yeah,
You
no.
don't want your health insurance to pay off. You don't want your car insurance to pay off, right? So same way with your portfolio. This is just something that you're going to protect your assets, and it's just part of the bigger picture.
Hmm. Hmm. And then just to add to that for the listeners' benefit, like I have business interruption insurance as well for my real estate. For example, I had a flood in one of my basements. So then some of the tenants couldn't live there. So I had to rebate them their rent, but the insurance company will cover my lost rent, right?
Right,
Because the
right.
mortgage still has to get paid.
Yeah,
The
the loss.
utilities, the heat and hydro, all have to get paid still.
Yeah, the loss of use, right? So
Yeah. So again, like people worry about like, oh yeah, you can lose everything. Well, I can mitigate a lot of my risks in real estate.
right.
Now, I really want to geek out with you about this whole hedge fund thing.
Sure.
Okay, so for the listeners' benefit, could you explain what it is that what it is that you started?
Yeah, yeah, and it's funny because actually it's almost in a way no different than the syndication for the real estate because the syndication, as we mentioned, was a limited partnership. A hedge fund is a limited partnership. That's all it is now.
Mhm.
Because a lot of people who don't know much more than or about kind of markets in general, they just assume it's this exotic thing or it's some exotic product or this
Yeah,
always high risk or high leverage. And most
yeah.
of the time, what you hear about hedge funds is bad news or this fund blew up or they used over leverage or whatever it is, right? So it's a limited partnership, and again, all the limited partners, myself included, we put up the capital, and the general partner, in this case, I'm also the general partner. I manage all the capital as one large pot, and I'm just trading one big account under one umbrella. And I collect the management fee. That's my compensation for managing it. But as a high level, that's it. It's just a limited partnership, and people pool their money. And it's just like real estate. There's economies of scale because when you can trade larger, and I'm not talking about trading larger in terms of like taking big bets. I'm just talking about like you know somebody with a small account trying to trade one share of this high price stock. It's going to be huge compared to their account. But like for my account, that might be so. Everything's relatively smaller.
Mhm.
So certain fixed costs like commissions or exchange fees, they naturally they're fixed, but as a proportional to the size of my
Hmm.
trades, they're smaller. So you do get that economies of scale, or you get the benefit of more efficient margining, which is how the brokerage analyzes the risk and gives you buying power to do trades. Um, and because of the way it's set up, I have an accountant or an administrator that basically keeps track of each person's invested amount because everyone's going to get the same return. If the fund does 10%, everyone gets 10%. But that dollar amount, this person may have invested $100,000. This person may have invested $1,000. They're both going to get 10%, but the dollar amount is different, right? But each person can invest however much or little they want and get the same benefit of a strategy that normally will require a large account, but they don't have to have a large account. So everyone gets that same return and just sort of pro rata, um, which like I said, it's just like what with the syndication actually. Basically, with the real estate, like all of that rental income, the NOI that flows back to the investors, and it's proportional to your how much you're invested relative to the size of the fund.
Are you the only general partner?
I am, yes. This one is
Whoa.
it's just me. Now that's good and bad because like real like oh not that mine is not real, but like institutional billion-dollar hedge funds, they may have multiple portfolio managers, they may have like compliance officer, they may have a whole bunch of staff, um, and that's just because for regulatory reasons they have to have all that infrastructure in place.
Mhm.
Whereas I don't. Maybe one day when it's a large enough fund and I actually have a large enough income, maybe I'll pay for some of these other staff or something. But
Mhm.
at this point, it's just me. So I'm really no different than a retail investor, just that happens to have a large pot of money, but most of
Right.
that money is other people's money.
I have so many questions. Do you have a minimum amount that you require for people to put into the fund?
I don't really. I usually kind of work with people like and uh I can't say too much specific about the details for regulatory reasons, but I will say that it's basically when you set up a fund, on your prospectus or your private placement memorandum, you can put X minimum, just sort of like that's what's on the sticker price or whatever. But as a manager, you have discretion to take as little or as much. You can sort of waive or kind of make these exceptions. Even if you have a management fee that you charge, you can do what's called a side letter and have a specific agreement with individual investors. Because maybe you're like, hey, this guy, I will cut my fee down if you give me a larger amount.
Right.
for example.
Right. So it's not just one shoes fits all for
That's
everybody.
that's
It's
that's right. Yeah.
okay. Interesting. Now I'm trying to think what the listeners thinking, what questions they have. I think the natural question is, what are the startup costs to create your own fund?
So the startup cost mainly is the attorney fee to sort of draft the documents and to create the limited partnership as the business entity. So there's like a limited partnership, and then there's an LLC that I set up as the general partner, which I control and own the LLC as well. Um, so that's gonna vary, but for me here, the guy I found, it was about 15 grand. Um, Now, if you don't have that capital, or if you don't have the investor base yet necessarily to be profitable from the fees, because you're going to have overhead, you can start what's called an incubator fund. So the attorney, and in this case, it was like $4,500. You set up the LP, and you can only trade your own money. You can't take investor money yet. But the purpose of the incubator fund is to have an official account with which you can trade, and you develop a track record, and that will be what you can use to go pitch or raise capital once you're
Okay,
ready.
okay.
And once you're ready to do the full launch, you pay him the rest of the money, and he'll draft up the remaining documents, because then you need the documents, to the actual offering that they call it, which is the PPM, and then the limited partnership agreement. Um, Once you flip that switch, from that point forth, then you have your overhead, the administration costs, and the administrator, like I said, is the person that keeps the books and keeps track of every person's individual amount and does your kind of the quarterly statements.
Is
And
that
for
you?
me, no, 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 no.
Okay.
Yeah. That's a service provider that I have, and for
Okay,
me,
okay.
yeah. It,
That's like a
it,
lot of
it
work.
yeah. And for me, it's like $500 a month. So from what I've seen,
That's
that's
it?
pretty
That's
low, pretty low. And I think that's because it depends on what industry you're in as well. Like, I had a friend who wanted to start or he was actually part of a crypto hedge fund, but because crypto is like harder to evaluate, I guess, or maybe there's certain things. There was an administrator they were talking to. I think it was like $3,000 a month or something like that. So something like a lot higher. So um, finally, the other last part of my overhead is so hedge funds are basically unregulated by the SEC for the most part, and so the only semblance of accountability is a third party audit. I have to get a CPA from to audit the fund's returns and trades and everything, and provide an audited report to the investors. They also happen to do the tax work. So as a limited partnership, um, you basically there's a K1 statement issued to all the partners. That makes it easy for them because they just take the K1, and I don't know what you guys use over to do your tax. But you can give it to your CPA, or if you use like TurboTax, which is a software here, it'll just ask you, are you in a partnership? Do you have a K1? Yes. You say yes, and then you take the K1, and it tells you which values to plug into which fields, and that's it. You just report on your own individual taxes. So with the administration and the auditing and the tax work, for me it comes about 15,000 a year overhead. So it's not. Frankly, when I was doing the research to start this thing, and once I got everything in place, I was pleasantly surprised that it wasn't like that expensive. Because when I first started out, I've read that some attorneys, for the startup, it could be anywhere from 35 to 40,000 to start up, and that would have been a lot heftier, and a harder decision to pull that trigger and go ahead and launch. Um, but I mean, it's not cheap, so you don't want to do it unless you think you can raise enough capital to get enough management fee to cover that, or if you just start off and you already have the investors lined up. Um, but at least and you mentioned I had posted some white papers or essays. Uh, Everything I just said was basically summarized in one of those essays, so people can go out and you don't have to take notes from this episode. You can just go and read my essay, and I kind of broke that down. Um,
Mhm.
but at least it gives people an idea, or who have aspirations to do something like this. It's not that hard. Honestly, the hard part is getting the capital, getting the investors, and
Yeah.
then keeping them and performing, right? So,
Well, yeah. If you can do those things, you get paid a lot of money.
right, right.
Oh yeah, like seriously, look at who makes all the money. The people that do those jobs.
Yeah, yeah, and I think part of it is not really even just about the money necessarily. It's we talk about economies of scale, and this is for me the ultimate scaling factor because with real estate or with any kind of business or job that's transactional or selling widgets, you get paid more for doing more. Physical labor obviously is hard to scale. Mental labor or creating products, that's one other thing. But with trading, I'm already doing it. I've been doing this for myself for years. But if by virtue of having more money in my trading account, I'm pulling a bigger fee,
Mhm.
but my physical actions of trading are not increasing, I'm just clicking more contracts, right? When I'm selling an option or something. And that fee is just going to go up and
Mhm.
my time spent won't go up. You know, that's what's enticing to me. That's
Right.
that economy of scale is it's like infinite basically.
So have you been transitioning away from all the other side hustles that you have? Like, do you do multi-level marketing too? You have some
No,
Amway, Tupperware.
no, I don't. Yes, recently, because you know you made this comment earlier about how much I'm making from everything I do. Honestly, like the real estate I mentioned, the residential real estate, that's been good. But the hedge fund is actually really just a startup. I started that about 2 years ago, which I guess sounds sort of like a long time. But full disclosure, I am not making money from it from a management fee perspective because I chose to start with friends and family and not take a lot of or not require them to give a lot of money.
Mhm.
And I'm losing money, quote unquote, on my overhead. But I recently I'm close to that break even point. So my sort of enthusiasm, excitement level has been kind of really getting to that point. So I am shifting focus.
Mhm.
Um, and I do hope to, one day be managing, 20, 30 million, whatever it is. I mean, who knows how far down the road. I just gotta keep my, nose to the grindstone and just keep doing what I'm doing.
Mhm.
But it is exciting to kind of think about projecting out one day.
Mhm.
I'm just trying to create another stream of income for myself, basically.
Very cool. And for the listeners' benefit, my understanding is that if you look across, like America, for example, who the top paid executives are, a large percentile of the top paid executives are hedge fund owners. Would
I
you be surprised?
I guess I don't know. It's hard to say because I assume it's like CEOs of like big corporations or something, and I don't really know like as far as the industry itself. I know there's like a few really big ones, like
Mhm.
Bridgewater or something, and I'm sure like Ray Dalio is probably making like multiple millions, but I don't follow like the hedge fund landscape per se. So honestly, you probably I probably know as much as you do about that.
I'll look it up. I'll try posting in the show notes.
Yeah.
I'll share it with you as well once I find it.
But I will say, just thinking about like again, just from a scaling factor, if a typical, not lately anymore, but like a typical hedge fund management structure for the fee might be like we call it 2 and 20, which is 2% of the management fee, which is the assets under management, and like a 20% of performance incentive, which is they take a percentage of the recurrence. So if somebody's managing $1 billion, just from that number alone, you can sort of extrapolate how much someone's making. So that kind of makes sense, just because of like there's so much money in the finance industry, especially now lately with the government has been doing, just like all the money that they're pumping into the economy. It's going to flow somewhere, right? Either into the financial system or um, maybe indirectly into like the real estate market, because that money's got to go somewhere. And if you think about that money there and the people who manage it, then you can sort of just, yeah, it makes sense what you said about how much
It
they're
may not
making.
be a fair comparison. I just did a quick Google. So Tim
Hmm.
Cook, I think everyone knows who Tim Cook is, CEO of
Hmm.
Apple. 2018, I believe his compensation was 12 million.
Okay,
You want to guess at Ray Dalio's?
more than that. Yeah.
First thing that showed up in Google was 2 billion.
Okay. Wow.
All right. So I can see why you want to focus your efforts on having a hedge fund. Like like Tim Cook. Everyone knows Tim Cook.
Yeah, right.
I'm sure it doesn't maybe it doesn't include his stock. That's a salary and bonus. Doesn't mention anything about stock. But
Yeah,
anyways, but wow, you'd have to have a lot of stock to make a billion.
yeah,
You need a lot of Apple stock too.
yeah. And again, it's just if you think about the scaling, right? All he has to do, get more investors, get more money, his compensation goes up, right?
Hmm.
That's
Hmm.
it's just yeah.
So this is a sensitive topic, so please just share what you can.
Mhm.
Uh, what did you tell your friends and family? Like how do you explain to them why they should be giving you money to invest for them?
So I think it's more friends and colleagues and acquaintances from my businesses. I don't think I
Hmm.
have so much family investing with me, but uh, I don't know. I just told them that I've been when I first started, this is 2 years ago. I said, "Hey, I've been trading for myself and investing. I've been
Hmm.
successful. I'm starting this hedge fund,"
Hmm.
and I sort of explained as high level as I could, what I could
Hmm.
options is. It's so like complex and like
It's crazy.
yeah. So and I just said, "You want to give me a shot?" And because I didn't say you got to give me X dollars, just like if you want to put some money in and see how it goes and let it grow and follow along,
Hmm.
and they did,
Hmm.
um, and that was how it started out. But now it's like, hey, I've been managing this hedge fund for 2 years. It's been doing well. X, Y, Z. I have these people. It's different now because, like, I guess I have some semblance of a track record now.
Hmm.
So, and I don't know if this is not necessarily a good thing, but I think knowing, and this was a little intentional, but like I just threw out there. I went to Princeton. I don't know, like and I have the electrical engineering background. So, and because a lot of my investors are other agents from my real estate brokerage, right? And real estate has really nothing to do with options and hedge funds and all that. But I guess knowing that I had an engineering background, or that's kind of my background,
Hmm.
um, and I work in that field, I guess they kind of assume like at least I'm good at math. I
Hmm.
know numbers,
Hmm.
and trading is sort of this analytical thing, quantitative, and he must be a smart guy. And I guess they just felt comfortable. It's not like they gave me their life savings or something like that, but they
Hmm.
were okay, giving me a little bit and seeing how I went. And thankfully, it's gone well. And as things have progressed and I've shown that success, they've continued to contribute funds or increase their contributions, and
Hmm.
it kind of just grew. Um, so I think I let the numbers do the talking
Hmm.
after it got started.
Right. So when you first asked them when you first brought it to them, did you show them your account statements? Like, what did you do to demonstrate success?
Nothing. It was I had back tests,
Okay.
and because before I was doing it formally, I would do all kinds of different strategies, and some worked well, some didn't. When I was confident enough to start the hedge fund, it was because I had finally developed my strategies into a subset of certain things that had shown to be successful, through back testing, through me doing it myself. And once I was able to know how to hedge my portfolio, for example, in case a crash happened, enough of these things came together that I felt comfortable to ask for other people's money. Like, hey, I think I can do it for other people. So I had a back test. I'm like, hey, you know, if you put your money in the S&P fund at the last 10 years, this would have been your return.
Mhm.
If you had done my strategy, this would have been your return, right?
Mm.
And
Ah, I see.
that
Okay.
showed, but again, you got to take it with a grain of salt, because they always say past performance,
Doesn't
is
that
not an
dictate
indication of
future?
future returns. And these were back tests. So honestly, I was definitely naive in thinking that I could just go out and do this, So to a degree, it was just like through sheer force of will that I got this thing going. And I think just having the confidence, and I guess having a bit of a sort of a sales background, like, because being an agent, you're basically a salesperson to an extent. I think of it more as a service industry because you're helping people with the transaction, but you have to have some kind of sales background experience or know-how. Um, and I guess I was just able to present myself confidently, and that was enough, you know. And to some people, I mean, I had one friend that was like, "I'm just gonna support you as a friend," you know. Here's a couple $1,000, you know. So yeah, I when I started, it was mostly personal capital with a little bit of seed money from like
Hmm.
friends and
Right.
acquaintances. Yeah.
But going forward, you can hand people these statements, right? When you go try to raise serious money.
Oh yeah, yeah, of course.
Mhm.
Because you know, I have part of the function of the administrator not only is to track your returns of your
Mhm.
investors, but they actually develop your track record. So they have something in their books that's called, you know, the quote unquote track record representative, which is just a dummy account that
Mhm.
started with, in this case, it was $100,000 at the date of inception, and
Mhm.
that's been tracking like what would that balance be at now based on the actual returns over the last 2 years. So,
Can you share
no,
that?
I can't. No, maybe off air, but no, I can't share that in
Okay, okay.
public.
For
Um,
listeners' benefit, understand this is a heavily regulated industry, and that's why David would love to share because I'm sure you'd all throw money at him, but he can't because it's regulated. I'm used to
yeah,
this stuff. I just don't know. We're in Canada. We have
yeah,
similar
yeah,
rules. I don't know if they completely translate, but my friends are the same thing. Like my friends who want to REIT, they can't give like
yeah,
any numbers. It's so awkward.
yeah. So,
But we're
so
offline. They can.
yeah, yeah, yeah. No, just to kind of clarify, it's regulated in the sense that because it's actually the actual workings of it are unregulated. So I'm not like a financial advisor. I'm not an RIA. I'm not a fiduciary. And
Hmm.
in fact, with the SEC, the fund is registered as a quote unquote exempt advisor. But
Hmm.
there's two provisions in the code that allow you to manage money as an exempt advisor.
Hmm.
And one of them, it's called 506C. You can look it up, 506C. It allows you to generally solicit mass market. You can have commercials. You can, you know, from people who you don't know, and you can disclose the strategies and performance and all that. But you have to do due diligence, and you can only take accredited investors. Do you know that
Hmm.
term? Okay,
Yeah,
yeah.
yeah, we have that here as
And
well.
not only that, you have to do the due diligence and verify, check their bank statements, check their whatever it is. Um,
Oh, you're
so
that
it's a lot
far.
stricter.
We're self-declared here.
Yeah, well, okay. So I was going to say the other side, which I'm under, which is 506B. I can't generally solicit. That's why I can't talk about publicly about the details of the performance and returns.
Got it, got it.
But I can only solicit investors one on one, and basically individual basis, people I know, friends and family, or someone I've sat and met, you know, one on one. And it is basically they still need to be accredited, but they just have to assert. So there's an investor questionnaire. They just have to say, "Hey, I meet these," and then, you know, the questionnaire has basically the criteria.
Mhm,
And if they assert it, then I don't necessarily have to do the due diligence.
mhm.
Now, if I have actual knowledge that they don't meet that, you know, I still can't take the investment, but it's a lower bar. And then, and actually, there's the same kind of setup with the syndication on real estate. You know, it's under either 506B or 506C, but 506B, it actually even allows for a limited number of sort of unaccredited investors. But in general, like the size of my fund, so the other way they regulate in terms of kind of protecting the general public is, you know, so these provisions of only accredited investors, but they limit the size. So I can only
Mhm,
take 100 investors total. So the
mhm.
size of these partnerships are limited.
Now, David, we're running out of time, so I only have like 2 more questions for you.
Yeah, sure.
Can you name some of these favorite strategies of yours?
Um, there isn't so much a name for it, but I will kind of describe sort of my approach. Um, so you mentioned selling premium, so you probably know. I'm guessing you sell put options on
Yeah,
individual
majority.
stocks or whatever. Yeah.
Yeah.
Okay. So I'll
Selling
do
at NIO
something.
this week.
Yeah, 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 yeah. Okay.
Not advice,
I'll,
folks.
so I'll do something like, you know, sell a put on the SPY, but
Okay,
I'm not
okay.
looking to own the shares, or I'm not looking to hope that it doesn't, you know, the SPY doesn't tank and I go into money. What I do is I set up a system where it's just about recurring occurrences and probability. So if I sell a SPY, a put at this level, there should be like X percent of it succeeding. Okay, that means there's another percent of it not succeeding, right? So that loss expectancy. But I limit the loss, so I might limit it to, so just a general example. Let's say I generally limit the loss to 2 times what I can win. So let's say for every $100 I can make, I can lose $200 because I limit that with the stop loss order.
Mm-hmm.
So that sets sort of the what we call the win-loss ratio. But the third piece of having long-term expectancy, which is actually beyond a profit long-term, is actually the win rate. So if I'm risking $2 to make one, if my win rate is north of something like 66%, right? Because it's like 2/3 of the time, not accounting for like fees and everything, you will make money. So as long as you set up these kind of strategies where I'm doing the same trade over and over, and I'm not looking for specific, oh, this company dropped today, so I want to sell on that. I'm literally selling on the same, SPY symbol every single time and across different expirations, but it's the same setup, and I'm just looking to sort of pull that lever over and over again, because I know that if I have risk to make one, if your win rate is above X, and you can just do the math out, the win rate times the amount you win minus out the loss rate times the amount you lose, you can sort of project out sort of that long-term expectancy.
Mm-hmm.
And I have multiple strategies that use the same premise, but I might sell at different levels, sell different expiration dates, and sort of the combination of these, and you're gonna get some win rate, and you just kind of let all of these things run in tandem. So that's sort of like a high level of sort of my more style of trading options.
And you have stop losses in case a
That
pandemic happens and
yes,
you can
stop
keep your
loss.
cash on the sidelines.
Yes, stop loss on those types of trades paired with the actual sort of insurance slash hedge positions, which are just options designed to trigger when there's a huge volatility event, like when the VIX goes sky high.
Yeah.
But,
and in layman's terms, it means the market's tanking.
Right.
And then, David, last question: where can people follow you? TikTok, Snapchat? You on all those things?
I'm not on those. I am on Facebook, and actually, I mean,
Facebook,
that's
okay.
where we met. So I'm in various Facebook groups. And actually, if you want to connect, so you can email me. My email is.
Oh no, hang on. We don't,
okay, sure.
We
okay.
don't do emails on this address.
Okay.
I still get complaints from 4 years ago.
Okay.
People are still emailing them. Give your website. If folks want to find your email there, then they can go do that.
Okay.
Make them work a little harder.
Yeah. No, I have a site that's it's not a real site. It's like a Google Sheets that I have set up, and I mentioned earlier, like I post the details on some of my strategies, the white papers that I wrote, sort of different content. So so it's okay to give the website, you said? Or
yeah.
So
just
it's
emails it's too easy.
Okay. Yeah. It's thetradebusters.com. So it's like the Ghostbusters, but the tradebusters.com.
You Ghostbusters fan? You're young.
No. I just use that because some people don't get what it's just easier to explain that title, and just don't be surprised. It's not an actual website. I just use that domain because it's easier to redirect to the Google Sheets. And my friend always complained, like, he's like, just make a real website because it's so like archaic. But because I do a lot of like tracking of trades and different things, like I'm like a spreadsheets guy, so it just naturally I just like use that as a page, and he's always complaining about it.
It's so easy to update, though. It's simple.
Yeah, but it's ugly. Yeah, I'll just warn you, it's really ugly.
I've already seen it. It's been all over it. I'm trying to find your trade log. David, thanks so much for doing this. I know you're squeezed for time, but again, thank you for doing this. For giving some time for some crazy Canucks up here.
Yeah, no, appreciate the opportunity, and thanks for reaching out.
Awesome. Thanks again.